I'm Jinesh, CFA and MBA 2011. So today's webinar topic is on Bitcoin crypto industry and privatization of money. So we'll try to cover this points. What is money? What's wrong with current financial system? Why gold and central banks failed? What is unique about gold? Gold versus Bitcoin. Value drivers of Bitcoin and crypto. Use cases of Bitcoin and crypto. Why fiat is violent? Gold has limitations and Bitcoin has potential. So what is money? According to a Boston University economics professor, Mr. Perry, any form of credit is money. So credit to a corporate, credit to bank, which is fixed deposit, even cash and gold is a form of money. But there is a hierarchy to this money. And when the crisis hits, people shift from a lower form of money to a higher form of money, which is cash and gold. But when the ultimate kind of crisis hits, something what happened in Germany after World War I and something what happened in Venezuela recently, people shift to the king of money, which is gold. So when we say cash is a king, it's actually a false king. And gold is the king of the money. So what's wrong with traditional finance? Last month, within few weeks, Federal Reserve printed around $3 trillion of money, which is almost equivalent to Indian economy. And Fed has been printing since 2008 crisis. So the side effect of that is that there is around 11 trillion worth of negative yielding bonds in the market. So practically whole world is lending to governments at negative nominal and real interest rates. So if you look at the history of interest rate as given in one of the famous 1960s bond trader, Mr. Sidney, you will see that kings and governments used to be a poor credit compared to commercial loans. So even Queen and Kings of London used to pay more interest rate, maybe around 15 to 30% than a commercial loan. Even in India, Indian bankers financed East India Company, considering it to be a good credit compared to Mughal Empire and other empires in India. Even in Bible, it's written that lend not to him who is mightier than thou. So when Federal Reserve prints trillions of dollars, then it's all the nations who are paying global inflation tax to Uncle Sam. So why gold and central banks failed? So before 1694, people used to use physical and silver gold coins.
Just one sec. Mr. Sudarshan, please go. Mr. Sudarshan. Yeah, go ahead.
Yeah. So before 1694, people used to use physical gold coins and silver coins for the transaction purpose, but this was a bit inconvenient. So around 1694, printing press was invented, and that's when the central bank came into existence, and people started depositing their inconvenient physical gold coins in a central bank, and central bank will issue paper currency called pound receipts, which were their liabilities, and that's how it became a more convenient to use a paper currency. This went until 1914. That's when World War I happened. And then governments realized that they can dilute the central bank balance sheet by putting government bonds on it and issuing more paper currency and funding the war. So even this continued even Second World War, and after Second World War in Bretton Woods system, dollar was backed by gold and all other currencies were backed by dollars. So that's how dollar standard came into existence. But in 1971, Nixon took off the gold standard. So dollar is no more convertible into gold. In 2008, Fed Reserve further printed and further diluted the balance sheet by adding mortgage-backed securities, which are home loans to the US residents. In 2020, they are further diluting the balance sheet by adding corporate bonds and even junk bonds and printing more money. RBI has also been chasing this race to bottom of dilution and has been adding non-gold assets since long. And even some of the gentlemen of the industry have recommended to add corporate bonds on the RBI balance sheet, which will further dilute RBI balance sheet and INR as well. So this is how central bank got abused. Its balance sheet got diluted, and the main purpose for doing it was wars and bailouts. So what's unique about gold? So gold is no one's liability. All the other assets, whether it's fixed deposit, bonds, shares, real estate, are someone's liability. So when you hold a physical gold, there is no counterparty risk to it. But for all other assets, there is a counterparty risk to it. So Bitcoin was built on this principle, and there is a very famous founding principle: not your keys, not your Bitcoin. Bitcoin has all the properties which gold has, but it has one extra or additional magical property, which is it can be transported over a communication channel. Gold cannot be transported over a communication channel. So from in God we trust, we move to in government we trust, and then now it's time to trust in algorithms. If we compare three monetary goods, which is silver, gold, and Bitcoin, silver was the first monetary good, but right now 80% of its demand comes from industrial use. For gold, it's other way around. Only 20% demand comes from industry, which is jewelry and semiconductor, and rest of the 80% demand is as a monetary good. For Bitcoin, it's all 100% demand is as a monetary good, and some use cases for Bitcoin are coming up slowly and steadily. So if you are planning to invest in a king of money, what properties one should look for in a money? So money should be decentralized, non-monarch, non-government, non-corporate, borderless, censorship resistant, and immutable form of money, which offers final layer of settlement during crisis. That means zero counterparty risk. So we have two options. One is Bitcoin, which is $125 billion worth in market cap as of now, and it has around 10 years of history. Plus, it can be moved on a communication channel, whereas gold has around $10 trillion of market cap, and it has around 5,000 years of history, but it cannot be moved over a communication channel. And we have seen how important communication channels are in this kind of crisis, in this kind of corona crisis. So the way Zero helped overcome the inefficient Roman numerical system and help improve the business or trade and commerce, and the same way Internet overcome the limitations of physical boundaries. So a person with Internet in a small town in Bihar or in Gujarat has access to same product and services which a person in Mumbai or Bangalore have, thanks to Amazon and Flipkart. Same way a person in Delhi or Bangalore has access to same information which a person in Washington or New York or Silicon Valley has. Same way, Bitcoin is going to democratize the global trade, because right now global trade is just concentrated among 10,000 corporates, because global trade is running right now on a weaponized dollar, and dollar is now being used more as a political tool for currency wars than to enable trade and commerce among the nations. So what are the value drivers of Bitcoin and crypto? If we look at the value creators for humans, that one of the two biggest value creators for humans have been internet and human languages, which is Sanskrit, Latin, Hindi, English, etc. If we analyze the characteristics of these two things, they are open, decentralized, and distributed. When I say open, it means you do not need permission to participate in it. So anyone in India or Africa can build a website and put up on internet. Decentralized means there is no CEO or a head office for internet or human languages. Same way, there are other two open and decentralized systems. One is Linux and other one is Gold. So Linux, internet, and human languages are human-made or man-made, and Gold is natural. While one can invest in gold, there is no investment vehicle to invest in Linux, internet, or human languages. On the other side of spectrum, there is closed and centralized corporates, which are also a value creator, but relatively they have been less value creators than others. So I believe that Bitcoin and crypto, being open and decentralized, will be somewhere between Linux and internet in terms of value creation. Fat protocols and thin applications. In internet, because there was no investment vehicle to invest in internet directly, which is TCP/IP protocol, most of the value capture happened at the application layer, which is Facebook, Amazon, Google, and Netflix kind of application. But in blockchain, I think that most of the value capture will happen at the Bitcoin and Ethereum protocol layer, and maybe some few other protocols as well. Whereas the application layer will be similar to gold. So you see so many mom and pop gold jewelry stores across the world. Even in a small town in Gujarat or in Binondo in Philippines, you will see a gold jeweler. Same way, there are hundreds and thousands of application layers coming up over the blockchain, which are adding value to the main protocol layers, which are Bitcoin and Ethereum. The other value driver for Bitcoin is governance model. So we have seen that how a promoter-based organizations can be driven to a ground by one single bad actor. Even with institutionalized boards, we have seen that how Lehman Brothers was driven to the ground by a single bad actor. Even in democracy, where there are hundreds of MLAs and senators, system can be hijacked or organization can be hijacked and can be driven to the ground. But thanks to Bitcoin, now we have an option where instead of relying on this institutionalized boards or parliament, we can rely on thousands of decentralized microprocessors running open source Bitcoin algorithm. So this algorithm will immediately kill any bad actor and throw out of the system. So instead of running monetary policy through central banks and supervised by parliament, we can run monetary policy through a Bitcoin or algorithm network. So use cases for crypto and Bitcoin. MakerDAO is one of the famous project after Bitcoin. This is on an Ethereum blockchain. So this is similar, this is an algorithm governed mint on blockchain. It works very simply. You put your Ethereum in a MakerDAO algorithm and you can mint DAI. DAI is equivalent to $1 and it is an algo-backed dollar stable coin. So once you repay your DAI, you get back your collateral, which is Ethereum. So MakerDAO is the decentralized autonomous organization. So the whole team is not located in a single location. So they don't have a head office or a CEO, pretty much similar to what we are doing right now. And its concept is very similar to the initial days of a printing press and a central bank. So you deposit your inconvenient physical gold and silver, and you get a paper receipts, which are a bit convenient to use. So here you deposit your volatile crypto asset and mint or generate dollar stable coins. So other use case of crypto industry is DeFi, which is called as decentralized finance and a stable coin. So these are all the applications which have been developed on the blockchain platform, and these are not the only ones. There are
Guys, one sec. Guys, please go on mute. Hello. Guys. Rahul Malhotra, Shekhar, Vivek Mehta. Guys, go on mute. Please.
I'm not going to stand
Hello.
creator for all my hard work.
Mr. Vivek Mehta. Vivek. Yeah, go ahead.
So these are not the not only the list of applications. There are many other hundreds of applications which have been developed. So, for example, this Neo is a team based in Chennai, and Aave is a team based in London. So all these teams are maybe 10, 15 programmers, and they do their marketing over Telegram and Twitter, and they put up their code on this blockchains and on internet. So what you can do here is you can, let's say, use Compound and borrow DAI or dollar-backed stablecoin at around 0.52% interest rate per annum. So just imagine a person in India or Brazil or any other country where interest rates are high now have an access to borrowing in dollars at 1%, 2%, or maybe less than that percentage interest rate globally. So this is a win-win situation for dollar and crypto industry. There are around 8 billion worth of stable coins, dollar stable coins, and JP Morgan in its report said that this market could be of potential around $600 billion. This is a sample of Aave app, which I just created for a demonstration. So here you can see that my borrowing rates are somewhere around 3 to 4%. And I can borrow at variable or stable rates, and I can borrow in algo-backed dollar stablecoin, or I can borrow in a regulated dollar stablecoin, and even I can borrow in an unregulated dollar stablecoin. My collateral composition here is Bitcoin and Ethereum. So this app was launched maybe 3 or 4 months back, and within that they have done a business worth of $50 million. Which is both deposit and lending. Again, all this lending and borrowing happens on algorithm. It's on the code, and it's estimated that there are around total $500 million worth of borrowing which has happened on this application. And this is just a tip of an iceberg. There could be an over-the-counter lending and borrowing for the Bitcoin and other such crypto assets. This is another app, BlockFi. It's funded by one of the investors is Fidelity. So here you can deposit dollar stable coins and earn 4 or 5% interest rate. So all these applications are borderless. So imagine why someone would keep their deposits or money in a depreciating INR, which gives 6 or 7% return, while if they have an option to keep their deposits in dollar and earn 4 to 5% interest rate per annum. So this is another app. This is built by Instaday. This is built by 22, 23-year kids in Hyderabad. And even this has been launched maybe 5 months, 6 months back. And they have the total business done is over around $8 million. So the total loan issued on their platform or on their algorithm. So future of finance, initially we trusted in a person. Most of the businesses or lending and borrowing happen based on a trust with a person, which are similar to pawn shops today. Then our trust level moved to an organization. Instead of just trusting a single person, we trusted organization, which is like JP Morgan, Goldman Sachs, or SBI, or ICICI. And instead of just relying on a single manager or a single shareholder, we kind of trusted the organization and the brand. Now it's time to move our trust to next level, to an algorithm. And we have seen that every time we increased our trust level, capital became more and more efficient and interest rate kept on falling. So today in Bihar and in Gujarat, all the interest rates of the product, let's say home loan or credit card, is same. But if you compare, that is because of the central bank, and that is because of the national banks like ICICI, SBI, etc. But if you compare the rates for India, Japan, and US, home loan rates in US is somewhere around 2-3%. In India, it is at around 7-8%. Now this spread can go down, I think, with the blockchain opportunity. So Indian blockchain ecosystem, exchanges are places where you can convert your INR into Bitcoin or Ethereum or other listed crypto assets. Financial services are where you can do lending and borrowing backed by your crypto, Bitcoin or Ethereum or other assets, and get a dollar funding at around 1% to 5% interest rate. infra are the companies which are helping, or the projects which are helping scaling up of the blockchains. So one of the problem which all of you would have been hearing is the scaling problem. So these are the companies or the projects which are helping scale Ethereum blockchain. So they are similar to Cisco and VMware, which help internet scale up from a dial-up to today's broadband. So why Bitcoin, not gold or fiat? So we have seen that game changer technologies have been shifting power between government and public. So physical inconvenience of physical gold coin and silver coin was replaced by convenient paper currency by invention of printing press and central bank. But then during World War, this institutions got abused by governments for funding the wars. But now in 2009, because of cryptography technology, we have an option to avoid the monopoly of currency by governments. So money is a collective fiction. Hello. Yeah, so money is a collective fiction. So choose your fiction carefully. Government fiat, particularly USD, is backed by violence. Gold is backed by physical scarcity, and Bitcoin is backed by cryptographic scarcity. Even mainstream media was not able to estimate the full potential of automobiles, and even Graham Bell underestimated his own invention. Currently, Bitcoin and crypto industry is worth $200 billion, and it's a non-government asset, and it's growing without any stimulus package. Just a brief of JP Morgan's report. The report concluded that world is absolutely ready for private money, and they even mentioned that crypto deserves a place in the portfolio. The same way yen and gold are hedged against traditional known unknowns, crypto is a hedge against yet unseen environment, which is a total loss of confidence in domestic currency and payment system. They also highlighted the risk of quantum computing, and they also pointed out that institutional investors' participation is growing in the industry. So this was my reaction when on March 12, Bitcoin crashed from $8,000, $9,000 to somewhere around less than $4,000. So I have a skin in the game. So if it goes to zero, then I will be hurt, and if it goes up, then I will capitalize and make profit on it. So I would like to combine what Shankar Sharma and Sandeep Ghate said yesterday. So our fiscal deficit is a problem, and INR is going to depreciate, and the Indian stock market is an innovation-free zone. So if you look at the top companies, refinery is a 200-year-old business model. Banks are 200, 300-year business models. IT companies are 30, 40-year business models. So there is no innovation in the Indian stock market. Even Flipkart will not be getting listed on the Indian stock market. Forget about Zomato or any other new post 2010 companies. But there are a lot of young people in India, which I think might not be working for TCS or Infosys or even Flipkart and Amazon, as we have seen with those kids in Hyderabad who developed an application on a blockchain and put up on a blockchain and are contributing there. So with all these things, with JP Morgan's report saying be prepared for an unseen environment, I would say buy Bitcoin. So yeah, thank you. I think that's it from my side, and maybe we can go with Q&A now.
Jignesh?
Yeah.
I want to know how one can reduce Bitcoin into the market. Suppose you want to produce it.
Okay.
Can it easily be done? Does it require a lot of money, or you can do it easily?
So there, you need mining hardware to mine the Bitcoins, and mining hardware have a good amount of capex and good amount of opex in terms of electricity. So Indian electricity prices are not competitive to mine Bitcoin in India, unless and except if you have some way of subsidizing electricity. It's difficult to mine Bitcoin in India.
You can do it through Singapore, no?
Sorry?
We can do it through Singapore.
We need to check the rates there. How is the electricity rate? Right now, most of the mining has become commercial. Instead of do it from home kind of the adventure. So you need a good amount of investment for the mining. And yeah, it all depends on the electricity rate.
But I was talking about introducing a Bitcoin. Can one do that?
See, you can introduce a new cryptocurrency on an Ethereum blockchain. Let's say AIM currency. So you can do that, but then the demand and supply all depends on how people are going to accept it, and what will be the monetary policy of the currency which you will be issuing. So yes, there can be a possibility. There can be a crypto, let's say AIM currency, and those currency can be issued and it can be used within the AIM ecosystem.
Okay, Jinesh, can I have your contact number? I'd like to contact you afterwards.
Sure. I will ping in the WhatsApp, AIM WhatsApp.
Give me your email address and your telephone number.
I have a very basic question.
Sure.
Jinesh, see, I want to understand when you say buy Bitcoin, or let's say we invest in a Bitcoin, suppose. Now, in the normal other investment stuff where you say buy stocks, buy gold, you buy it with a rupee, you invest in it, and then later when it appreciates, you sell and you get your rupee back, and that is your actual realized profit, let's say. So I can use that money for whatever I want to do. Now here, is it the same in case of a Bitcoin? I invest, then it appreciates, I sell it back, I get my original INR or dollar, whatever back, and that is my benefit, or Bitcoin itself can be used to buy something else, so do I have to come back to my original currency?
So ideally, Bitcoin is meant as a savings technology instead of savings in the government backed currency. So, but until and unless it doesn't become acceptable everywhere, you need to come back. But yeah, there are places where you can use your Bitcoin to buy products and services. So in Philippines, last year, Philippine Airlines did participated with one of the crypto company there, and they are accepting Bitcoins there. So there are some companies which have started accepting Bitcoin.
Okay, thanks, Jinesh.
Does it cost a lot of money to introduce a Bitcoin?
See, to generate a new cryptocurrency, there are simple programs like within few lines of code you can introduce it. The main issue here is how acceptance will it be, how people and how the community will accept it. So that is the main challenge.
That depends on the broker you hire, no?
Sorry?
That depends on the broker. Broker of the Bitcoin.
It depends on a broker. Here it's exchanges, crypto exchanges. So if your coin is listed on those crypto exchanges, there are high chances of getting it accepted among the community.
Okay, Jinesh, I have a question.
Sure.
Yeah, okay. Can I apply the concept of blockchain or cryptocurrency in the field of fine art, painting, etc.?
I think there are some projects which are working on those things. But yeah, I mean, I haven't seen any exact use case for that yet. So
for example, I have a painting of F.N. Suja, Francis Newton Suja. The price of this painting is somewhat around 75 to 80 lakhs. But it's very difficult to find a buyer. So why not I should go by using the cryptocurrency or blockchain kind of concept and creating tokens and then selling those tokens to the market?
Yes, that's also
investors. Yeah.
So that's also something which is where people or projects are working on, even real estate. So some people try to sell real estate by tokenizing it in Philippines and in Vietnam. I don't know whether they were successful or not, but yes, those are the possibilities which can happen in next 20, 30 years or maybe less than that.
No, but what I gather that blockchain means digital authentication or certificates like that. Whatever the documents that we create digitalized. So, for example, if I have to create the provenance of artworks and then I have to sell them into the market to the different investors, not only one investor, because sometimes the price of painting is very, very high. For example, if I have a painting of Picasso, if I don't process even, the Picasso painting goes 80 million or 100 million US dollar. So how can I sell those kind of paintings? How can I create those kind of, you can sell like cryptocurrency in the market for the field of art?
See, the right now what has happened is where the industry has progressed is there are gold-backed tokens, gold-backed crypto tokens right now which are available. So it has already happened with gold and dollars. I'm sure it's just a matter of time where this paintings and real estate will also be tokenized.
No, if somebody will start and then after I will follow, then this is a different process, right? I want to start right now, even nobody is trying to do it. So how can we do it?
Okay. So the way they have done for the gold is they registered. I'm just trying to extrapolate the way they have done it for the gold and even for the dollar. So maybe that might be a way for the paintings and real estate. So the way they have done in gold is they have a gold in Singapore in a government regulated vault, and they have the numbers of whatever the gold bars or gold in those vaults, and they have issued the tokens on the blockchain, which are easy to audit and they are immutable. So nobody can create a new dollar or a new gold token. So yeah, so that I'm not very familiar with how to get to that stage in terms of regulatory compliance and technology part. But yeah, that could be something which could be a part of the future.
Okay.
Just a quick question based on the gentleman who came before me. This whole painting thing, isn't why would you use blockchain to do that when you could simply just say that this is a painting, all of you can put in money, you have a fractional share in it, and it'll keep going up. So you just got like, let's say 100 shares of the painting treated just like a company. So why would one use blockchain over just saying this painting has got 100 shares, that's it, buy now, and then the shares will keep going up based on the value of the artist?
See, the one thing which
I'm sorry, one more thing before I mute my mic. Hey, if people are taking a piss, please mute your mics. Yeah, what's going on, guys?
Sorry, come again. I am not able to hear the last part.
Before this, someone went to the toilets and saying, please mute your mics. We don't have to hear you take a piss. Somebody else. That's all I'm saying. I mean, it's a simple functionality. Please learn to mute mics.
That's true. Thank you.
I just want to check out one thing. Can you introduce if you introduce a Bitcoin, a crypto, with gold backing it, is that a good idea?
So I will answer the two questions. So one was why use blockchain and why not just use simple shares for backing those fractional shares for the painting. So one thing which blockchain provides is it's a borderless and it's a permissionless. So if you can tokenize this assets, then practically you are opening up to the whole world. While doing the shares and those things are practically limiting to the jurisdictional restrictions. The second thing which someone mentioned about the gold-backed Bitcoin or the crypto, yes, there is already a gold-backed stable coin. So it's 100% backed by 1 gram of gold or maybe 10 grams of gold. And there are at least 4 or 5 projects on that. So right now you can buy gold on blockchain, put it as a collateral and borrow at maybe around 3%, 4% interest rate. So even let's say if you have a physical gold or even dollar bonds which RBI is issuing, you cannot get 3%, 4% interest rate loans with those things. But with gold crypto assets, gold-backed crypto assets, you can borrow at 3%, 4% on the blockchain.
Hi, Jinesh. My
Yeah.
name is Aditya, MBA 2013. I have a quick question. Apart from
Okay.
trading of the cryptocurrencies, Ethereum, Bitcoin, whatever, I am talking about what other business models can be replicated in India after we have seen the new judgment on the future of cryptocurrencies. For example, I'm talking about what about the ATMs wherein people can buy, Ethereum or Bitcoin or any other kind of cryptocurrency in exchange of physical money. That could be in INR. Absolutely, yes, what you are showing right now. So,
Yes.
what are the different business models and what do you project? How it will be look like in India?
Yes. So this one was the first government-regulated bank which opened Bitcoin in the heart of Bitcoin ATM in the heart of Makati, just opposite to the Philippine Stock Exchange. So even the regulated banks are getting into the Bitcoin thing. The other business models which are still yet to be explored is, let's say there is already dollar and gold-backed stable coins. I heard someone is trying to come up with INR-backed stable coins. So you buy those stable coins and you actually allow anybody from anywhere in the world to have an access to INR. So that is another business model which can possibly come up, given that there are 1.3 billion people, and people might feel more comfortable using INR-backed stable coins than maybe using USD-backed stable coins. So that is one possible business which can come up, and then other possible business opportunities are even in the DeFi space where the lending and borrowing is there. All these different apps are focusing on the different features of financing. So someone is focusing on a variable rate, someone is focusing on fixed rate. There are still no opportunities where people can get financed long term. So let's say maybe 1 year or 10 years. So there can be apps or algorithms which can be developed where lending and borrowing will happen for a longer duration, 1 year or 5 years or something like that. So those are also the possible. Understand that now since 10 years, Bitcoin is already a digital asset. And now people might not want to sell it, but they might want to put it as a collateral and want to borrow whatever USD or INR. So that is the most immediate use case or business which can be developed.
Sorry.
Yeah, one sec. The best way of going ahead is like we did yesterday. Please raise your hands, because if everybody butts in, it is going to be like a fish market. So Anil Ibrahim goes first, and then Rahul Singh goes second. Please raise your hand. Everybody will get a chance to answer. Anil, please.
Nikhil, can we ask everybody to mute? Because it's very disrespectful to the speaker and the other people are hearing. Can everybody get on mute who's not speaking?
I have tried 10 times and I sent personal messages. Then what can I do? If people don't understand.
No. I'm not blaming you. I'm just trying to get a message across to everybody to be a little more considerate. That's all.
Yeah, true. Anil Ibrahim and then Rahul Singh.
Hi, Jinesh.
Yeah, hi. Hi, Rahul.
Actually, I read online that the IMF is planning on banning stablecoins. So if that actually happens, what will happen to Bitcoin?
Sorry, Rahul, your voice is choppy. Can you repeat?
I actually read online.
Okay.
That the IMF, International Monetary Fund,
okay,
is planning on banning stablecoins worldwide.
Yes. So FSB, which is Financial Stability Board, has recently recommended G20 countries to ban stablecoins. But again, I checked that report. So that report is not completely banning the stablecoins. So they are saying that unregulated stablecoins, which are not going to follow the regulation, try to ban them or try to regulate them. So yes, that report is something which is of a concern. But the way this industry is moving is like those kind of reports also came for Bitcoin, but government until now, even U.S. government has not been able to stop Bitcoin or do anything about it. So they are more or less falling in line, and they are just trying to adjust to the new dynamics. And I think same will happen with stable coin regulation also. And most of the governments will kind of accommodate this new innovation.
So Rahul, are you going to ask a question?
Yeah, hi. This is Rahul Singh Jinesh.
Yeah.
Okay. Actually, I have already asked my nephew to do this. I mean, like the farming part, and plainly, he basically, you know, he has put up farms in Iceland, and basically, I mean, like geothermal and solar power regions now. Okay, so quite a large size, and as you might be aware, with the farm, you have to be really, you have to play. Well, one is like gamble on your equipment. You have to keep changing it
Yes.
to the most latest one. That's how you earn that's how you mine it, right?
Yes. Yes.
Question was, very simple and plain. Okay, right now, I mean, like still there are a lot of uncertainties. I mean, like when we look from far away, like regulations not coming in or whatever was expected is late, whatever and all. Okay, how do you see
Rahul
it?
Bhaiya,
After COVID, okay, we are going to we are going to hit prices like 2008 or even worse than that. So how do you see from your honest point of view, like Bitcoin farming business, or like you have already very well explained everything, but Bitcoin farming business will keep earning you, your expected returns. Sorry for a long question.
Yeah, so I get your question. So what you are saying is, with all this things happening around, how will this affect the profitability of the mining industry? So yes, mining industry is a very competitive business, and people need to keep on upgrading their hardware and also keep on to make sure that their electricity costs are at the lowest possible, because they are not just competing with miners in one location. So miner in China might be competing with a miner in an Iceland. So yes, that is a competitive industry, and as far as I know, most of the miners are making profit. I mean, out of 5 years, they might be losing for 1 or 2 years, but they are able to make profit and overall return, and that's why the hashing rate, which is an indication of how powerful the network is, has been growing since even after the price crash. So price crashed from somewhere around $18,000 in 2017 to right now at around $6,000, $7,000. So even in this 3 years, the hashing rates has been growing. So when there is more hashing rates, it becomes more and more difficult for even the supercomputers or quantum computers to hack the Bitcoin network. So people would not be putting so much of mining equipment and capex if they would not have been making money.
Arshad Ahmed, and before Arshad goes ahead, Mr. Veer Mahendra and also Goswam. Veer Mahendra, kindly switch off your mute, please. Can you go on mute? Mr. Chief Veer Mahendra, please go on mute. Arshad, go ahead.
Yeah, thanks, Jinesh, for this wonderful presentation. So I just wanted to understand with respect to as a investment, basically as a portfolio, as a basically like we have stocks, gold as a our portfolio. So just as an alternative, we can have Bitcoin as our portfolio. And I just wanted to know if we just as a pure investment, we just keep some of our earnings in Bitcoin, what kind of returns we can expect in the long term? And second thing is like, is it like matured enough now to do that, to Like as of now, put our money in gold. We know gold will not crash. That is like a safe asset. So like that, how can we treat Bitcoin as an investment option for diversifying our portfolio? So I just wanted to know a little bit more details on that aspect.
Yes. So yes, that's a good question. So if you will look at the history of Bitcoin from 2010 or 29 until now, I think it is one of the best performing assets globally. So it has been outperforming even S&P 500. So that is one data point. The second is it's very volatile. So I mean, when I started with just 500 rupees and explored all the ways to make sure that if I go more than that, how to ensure the safety of it and everything. So today the technology has developed so much that you can easily secure a big amount worth, let's say, crores, and in the hardware wallets, which are hack proof relatively. And then if you have a let's say 5 lakhs or 3 lakhs of rupees, you can put it in the mobile wallets, mobile Bitcoin wallets. So the technology has developed. Volatility has not gone that down, but compared to what the volatility was somewhere back in 2012, 2013, it is certainly down. So if you are looking for, let's say, something like 5 years, 10 years, it is certainly a good way to diversify. But personally, I would not go beyond 1% to 5% of my net worth because there are risks that it can go to zero, but there are also possibilities that it can go substantially high.
Yeah, Rishindra, please go on mute. And a request, guys, we are doing this 9th webinar. I think we should follow some etiquettes. I mean, there is a tick box that do not join in with audio. Please take that, because when you people come in, you're breaking the monotony of the speaker, and it's very disturbing. I mean, I request you with the humble request, please. Thank you so much. Any other questions, guys? Anybody wants to go?
Yes, I would like to ask a question. Jinesh, hi. Aditya, once again, MBA 2013. So my question regarding that AD1 was precisely on basis on two factors. One is India, and second is the new judgment which has been come out of Supreme Court. Because there was one company, as far as I remember, there was one company who actually tried to sell one of the or multiple cryptocurrencies with the exchange of physical INR, and they were sent to jail. I didn't follow up that news later on, but now, do you think, what's your projection after the new rules and regulations, or after the authority given by the Supreme Court, that business model may survive in context only in India, not about the Philippines, please?
So after the Supreme Court regulation, see, you have to understand, Supreme Court regulation was against the banks which it regulates. That is ICICI, SBI, and those kind of things. So they were not allowed to give banking services to these exchanges, which is like WazirX, CoinX, ZapPay, etc. So the banking channel to them was removed. So people who wanted to buy or sell Bitcoin find it difficult to deposit INR or withdraw INR. But then even during the ban, some of these exchanges innovated, and they built up something called peer-to-peer, which is very similar to Uber or Ola, where a depositor and a withdrawer are matched. So that was the way around these exchanges found during the RBI so-called ban period. And now Supreme Court has already said that there is no more, I mean, the ban by RBI was unconstitutional. So all these exchanges are now getting banking services. So it's very simple. The way you put your INR in a stock market through your broker, here also you put your INR in these exchanges and do a buy or sell of the Bitcoin and other crypto. So the news which I think you might be referring to is the ATM somebody put up in the Bangalore, which I think he got into problem because he used the word ATM. So later on, he was, I think, released as well, and he said that okay, he might not use the word ATM for those kind of services. So see, there can be a way around, because it's a traditional industry, and there are regulators which might get annoyed with certain terms. So businesses have to be careful on how they navigate this thing.
Jinesh, thank you so much. I just want to say that I will connect. I would like to connect with you on this offline as well. I think
Sure.
there is something missing. Some communication gap is happening. I will connect with you offline as well.
Okay, sure.
That you can take offline. So I think nobody else has any questions, looks like. If there is, we have 5 minutes left.
Nikhil, this is Sanjeev. Can I ask one
Sanjeev,
question?
go ahead.
Hi,
Please,
Jinesh.
please go ahead.
Hi, Sanjeev.
Excellent presentation, fabulous. Okay, I have a quick question now. If my company or I want to borrow money, you said you can borrow at very attractive rates, say 1% or even sub 1%, right?
Yes.
So what exactly is the process for that? And second, although the rate might be 1%, you are still exposed to volatility.
Yes.
Did I understand it right? I mean, it might be 1% if I borrow for across 3 years.
Yes.
And when I have to repay my loan, the Bitcoin rates might be very, very different.
Yes. So when I said you can borrow at 1%, so you can borrow in the whole lot of different currencies or cryptocurrencies. So you can borrow in dollar stable coin. You can borrow in euro stable coin as well. So let's say a dollar stable coin rates will be somewhere around 1% to 3%, and maybe fixed rate might be somewhere around at 4%, and it's for 1 year or 2 years. So your volatility exposure is on the collateral. So you have to put up a collateral. So if you are putting, let's say, 10 lakhs worth of collateral, you can easily borrow at an LTV of around 60 to 70%. So you can borrow 6 lakhs, 7 lakhs at around whatever 3%, 4%. And so yeah, when if the price goes down, then there is a possibility that you have to put up more collateral, pretty much like what happens in the loans against stocks or loans against gold. So it's the same concept. Only thing is it becomes borderless. So there are people who are willing to fund you at lower rates. People in Japan or people in US who can fund at lower rates.
Okay. And one related question: how would a lender do a credit assessment?
So here, there is no. It's the algorithm which is the middle layer. So lender and borrower doesn't come in face to face or even any form of online communication. So the lender is protected through the collateral, and he's trusting the algorithm that if the collateral value goes down, then the collateral will be liquidated. So it's a 24/7 market. So, and the algorithm tracks the prices 24/7. So he's trusting practically algorithm to take care of the loan which he has given.
Thanks, Jinesh. Thanks.
So,
Thanks, Nikhil.
Yeah. So guys, thank you very much for your interesting questions. And first of all, Jinesh, this is something which most of us, at least me, I just know the name. So thank you very much for an awareness presentation. It was very nice, very clinical, and all the best to you. And if anybody requires any information from you, definitely we can pass on your email ID or telephone number. So thank you guys. And thank you, Jinesh, once again.
Thank you, all of you. Thanks for your time. Thank you.
Thank you, Jinesh.
Thank you,
Love to hear
Jinesh.
you.
Yeah,
Thanks so much.
thank you.
Bye.
Bye.